Guys, welcome back to a brand new video. I'm RexFinance, and in today's video, I'm going to be covering 3 stocks that I believe are going to double over the next 12 months. Now, it needs to be said, just because I believe a stock is going to double doesn't mean that it's going to happen. So don't blindly follow what I'm talking about in this video. Please do your own research and your own analysis of these companies before making a buying decision. That being said, I'm going to do my best in today's video to explain why I believe these certain stocks are going to double, and I think I have pretty good reasoning. So I hope you guys agree with me by the end of the video, but if you guys are new here or returning and not yet subscribed, please hit that subscribe button down below and leave a like on this video if you enjoyed this type of content. It really helps out the YouTube channel. Without further ado, let's go ahead and get into these 3 stocks. Stock number 1 that I believe is going to double over the next 12 months is a company called Shift Technologies, ticker symbol SFT. Let me tell you why I believe this is going to double up. We had a really good earnings report from this company come out just recently where the stock actually gapped up to over $10 per share. Even at $10 a share, I would argue this company is tremendously undervalued. And that's because if you compare their valuation to their competitors like Carvana or CarLotz, Shift Technologies is tremendously undervalued even if you just give them the valuation metrics that their competitors have. However, ever since that great earnings report, the stock has been down and down and down and down. It seems like there's no end in sight. But that's when a guy like me likes to step in and actually buy shares heavily of this company. Because nobody can convince me that 12 months from now I won't be up significantly on my investment. And let's look at this one thing that I think is extremely crazy about this stock valuation currently. If we look at the valuation, we can see that its current market cap is $600 million. Now, I'm going to bring up their Yahoo Finance stock page, which will take a minute to load here. But if we go to the analysis section on the Yahoo Finance website, we can see that they have 6 analysts who are giving an estimate of $1 billion in revenue for 2022. That is ridiculous. Let's go back to it. We have a $600 million valuation on this company right now. They're going to do well over that current market cap in revenue next year. That is something that is number 1 on my list of things I look for, are companies that are mispriced and misunderstood by the market. We know that Shift Technologies is misunderstood because, again, in relation to its peers in the stock market, even if we gave Shift Technologies the valuation metrics that its competitors have, this stock price would be at least double what it's at currently, trading right now in the $7 range. So mark this date. 12 months from now, I firmly believe that Shift Technologies stock is going to be trading at double the current price that it's trading at. I know that just looking at how much revenue they're going to do next year in relation to their current market cap is pretty lazy, but even if we look at the way this company is going to start turning out a profit and they're going to start growing that profit tremendously, it gets me very excited. Shift Technologies is one of those companies that, even in my own members-only Discord server, there were people that said, oh, I used Shift Technologies, I didn't even know it was a public company. But when they find out it's a public company, they invest right away into that company because they had such great customer service. And that's how Shift Technologies beats its competitors like CarLotz and Carvana. Anyways, that's enough for this stock. The stock is currently trading at $7.26. I think 12 months from now, this will be well over $15 a share, barring any dilution that the company may do. One last note that I want to make about this stock is that the executive team has been going out on the open market and buying shares like crazy. Obviously, you love to see that as a shareholder of a stock. But anyways, that is stock pick number 1. I think this will double up over the next 12 months. Without further ado, let's go ahead and get into stock pick number 2. Stock pick number 2 is a stock that if you guys have watched my channel regularly for at least a few months now, you will know I am very bullish on this company. Stock pick number 2 is CleanSpark, ticker symbol CLSK. There are a number of things that I really like about this stock and its current valuation, but what I want to highlight is that CleanSpark is clearly a misunderstood company in the stock market, where they aren't getting the respect that companies like Riot Blockchain and Marathon Digital Holdings are getting. They're not respected as a Bitcoin mining company right now. That could be due to several different reasons. I'm not going to highlight those reasons in today's video, but what we need to focus on is that clearly right now CleanSpark is disrespected and misunderstood by Wall Street. And we all know that eventually Wall Street always catches up to the game if they're misunderstanding or disrespecting a stock, and the stock proves that they are going to be a successful company. That is exactly what's going on here with CleanSpark in my personal opinion. I've already covered that CleanSpark is a Bitcoin mining company. They also have an energy business that's been at its core since its inception. So looking at CleanSpark's current valuation, it's well off of its all-time highs like most high-flying growth stocks right now. CleanSpark was trading at over $40 a share just 7 or 8 months ago. So the fact that it's trading around $13 right now, I believe it's a tremendous buying opportunity. If you guys are members of my membership, you guys will know that I was buying shares heavily of CleanSpark when it was in the $10 range just a few days ago. If you guys are curious about joining that paid monthly membership, you get access to my buy and sell alerts, my due diligence files, access to my community, extra access to me, all that good stuff comes along with it. If you guys are interested in that, hit the join button down below located right next to the subscribe button, or hit the Patreon link down in the pinned comment. Anyways, back to this. The current valuation of CleanSpark puts the company at a $465 million company. Using any valuation metric out there, you can compare Marathon or Riot Blockchain to CleanSpark and see that CleanSpark is very disrespected right now with its current valuation and its anticipation of where it wants to be with Bitcoin mining going in the future. So, the number one catalyst to get CleanSpark to double up over the next 12 months is the price of Bitcoin itself. If the price of Bitcoin itself does very, very well, so will CleanSpark, because such a large percentage of CleanSpark's business is tied to Bitcoin. I think personally that over the next 12 months, there is a very, very low chance that Bitcoin is not over $100,000 per Bitcoin. I think that transition to over $100,000 per Bitcoin could actually take place before the end of the year. In that case, I would hope that we are going to be back at all-time highs actually by December 31st of this year if the price of Bitcoin cooperates. And that's a big if. If the price of Bitcoin doesn't cooperate, well, it could be a long 12 months for CleanSpark shareholders right alongside Marathon and Riot Blockchain shareholders. However, most people agree that Bitcoin is likely going to perform very, very well going forward. Let's look at what analysts have for CleanSpark going into the next year. We just covered they have a $460 million valuation on the company right now. Let's go to the analysis page, and we can see that next year analysts have them doing about $200 million in revenue. And that's with Bitcoin at like $40,000 per Bitcoin, I think, is when they made this valuation for the company. So that number's likely risen quite a bit, which would explain why these two analysts have actually reiterated their buy ratings on CleanSpark, despite CleanSpark being at lows currently. We had one price target taken down from $45 a share to $35 a share, but we also had the second analyst actually reiterate its buy rating and also its price target of $50 per share. So this isn't just some crazy guy on YouTube spouting off about a stock that he thinks could double up. Part of Wall Street obviously agrees with me as well, as two analysts cover this company, and they have price targets well over double the current share price of this company. So in my eyes, I think we're going to do well over $200 million in revenue next year, and that's going to be at 60 to 80% margins on that revenue. So that's going to be very, very big. So hopefully you can see why I believe these first two companies are going to double up over the next 12 months. Again, I don't have a crystal ball. I'm just a general fellow, just like anybody watching this video. I don't have any superpowers or anything like that, but I strongly believe that these first two are going to double up. Without further ado, let's go ahead and get into the third pick of this video. Stock pick number 3 is also a company that I've talked about several times on this YouTube channel, and it's also a stock that has been beaten down in this current market. This company is SGBX, ticker symbol SGBX. On the surface, this isn't a sexy business model what this company does, but the way they're currently valued almost makes me certain that the share price is probably going to double over the next 12 months. This is again a case of Wall Street misunderstanding what a company is and what they do. SGBX is a construction company, but that's not even the tip of the iceberg of what this company wants to become over time. However, Wall Street is putting very, very low valuation multiples on this company, and they are clearly valuing SGBX as just a construction company. Again, as SGBX builds out its business model, this is going to be much more than just a construction company. This company has medical revenue from its mobile COVID-19 testing centers, such as at LAX, Los Angeles Airport. That's just one example of where SGBX is located. In addition to the construction and medical revenue, this company has also taken steps to secure real estate and purchase real estate. And they're going to be building properties that they own outright, that they will rent out as affordable housing to the everyday citizen like me. Obviously, that's going to create predictable recurring cash flows that are also high margin. What that also means is eventually this company is going to start buying back shares of its stock. The management team has mentioned this, but also this company is going to start putting out a dividend. Right now, I don't think this company has any business doing that as they are not yet cash flow positive. However, if you dig into the quarterly report and the earnings call in particular that this company most recently did, you will find that this management team fully expects to be cash flow positive in the current quarter. So the next quarterly release for this company, they're going to be a very profitable business. What that can lead to is opportunity. I love opportunity. I believe this company is disrespected and misunderstood by Wall Street, and I think eventually, as always is the case, Wall Street will begin to understand this company and put a better valuation here. Looking at the current financials here, we can see that they have a $30 million valuation on the company right now. And if we look at the trailing 12 months, so over the past 12 months, the company has done $29 million in revenue. That figure is only going to continue to increase each quarterly report, especially if they can continue to build on their construction and medical revenues. Obviously, what that's going to do is turn this into a profitable company, but it's also going to force a better valuation on this company. Right now, the market cap equals their trailing 12 months revenue. That is kind of crazy, and honestly, I think I stumbled upon a gold mine with this stock because it's not often you can find an undervalued company like this, especially in today's hot market. We can also see that they have plenty of cash to cover their total debt. But one thing that I want this company to start working on is getting more analyst and Wall Street coverage. If we go to the analysis section, we can see that they have 0 current analysts. That needs to change if they want to benefit shareholders. It's just the way it is. If you can get analyst coverage, typically your share price is going to perform better. So over the next 12 months, I firmly believe that SFT, Shift Technologies, CLSK, CleanSpark, and SGBX, SG blocks are all going to double. You can mark this date and come back and give me crap if I am way off with these 3 stocks, but I think I'm going to be more right than wrong. So come back 12 months from now if you remember to do so and see how I performed. Again, if you guys are new here or returning and not yet subscribed, I would greatly appreciate you hitting that subscribe button. If you enjoy this type of content, please hit that like button as well. And with that, I'll be back with a brand new video next week. Peace out.